Okay, everything, Jonathan. Let's discuss this extremely optimistic forecast of $2,000 per share by 2027. When several street analysts cut their prices, you're upping your price target. I suppose this is because they were concerned about margin pressure earlier this week. What were they missing? I will admit that Tasha Keeney's interview, in which she explained the reason behind the hike in the Tesla 5-year pricing target to $20,000, was just amazing. Watch this 90-second clip, and let's discuss whether we think the increase is justified or not. About margin pressure. What are they missing? Well, I think the concerns of our margin pressure are very short-term oriented on. We've heard Tesla say this, but we'd actually modeled the opportunity in robotaxis and autonomy. And if you look at the future of Tesla vehicles that are capable of becoming a robotaxi enabled, earning a recurring revenue stream at what we think will be a software as a service like margins. This is an amazing potential for Tesla. It'll definitely be, the highest return on investment per battery, produced as we've analyzed in our new report up on our website. So I think that, again, this will totally change Tesla's margin structure in the future. They mentioned on the earnings call that they're prioritizing getting cars out on the road. I think that's a smart decision as opposed to, keeping margins high and prices high in the short term. They just want to get as many cars out on the road as possible. Those cars feed Tesla's data engine, and that's what turns each of them into a fully autonomous car in the future. Yeah, Elon said on the earnings call he thinks they could achieve fully autonomous this year. Is that your expectation? So we have a Monte Carlo model with a range of assumptions. It would be later than Elon claims because 2024 is when we expect things to be halfway done. In our most optimistic scenario, I believe they may release a fourth quarter this year. But once more, the important thing to consider is that this is an incredible opportunity regardless of whether it is a fourth quarter, next year, or the year after that. It is evident why Tesla is chasing this opportunity given our estimate that the worldwide market for robotaxis might be worth $9 to $10 trillion in the next 10 years. Again, with their verticalization and data advantage, they have the potential to be a leader in this space. A day after the business revealed a more than 20% decline in net income and EPS from the same quarter last year, Tesla's shares dropped by almost 10%. But as uncertainty increases, more experts are lowering their price forecasts for Tesla. Model T locked after Tesla's most recent Q1 earnings call. Cathie Wood and her company Ark Investment had decided to view this as a chance for investors to buy. Many investors reduced their price targets and predictions for Tesla. But since Cathie Wood stated that you're going to find out, it's possible that she has a completely different perspective on all of this. Hi everyone, happy to be back at Tesla tomorrow. The electric vehicle company, Tesla, is expected to soar to a valuation of over $6 trillion over the next 4 years, according to Wood's firm Ark Invest, which recently disclosed that it had purchased 219,810 shares of the company in its flagship Ark Innovation ETF, and an additional 36,213 shares in its next-generation Internet ETF. This amounted to approximately $41.7 million, using Tesla's closing price of $163 on the day that the stock fell 9.8% and the company lost $51 billion in market value. In addition, Ark Invest announced a revised price objective for the automaker's shares, speculating that, under ideal circumstances, Tesla's stock may hit $2,000 by 2027. How will this come about? Let's find out. But first, if you enjoy this kind of information, please click the like button, subscribe, and remember to enable notifications so you can stay informed about everything Tesla does. Recent predictions for Tesla's stock performance, made by Cathie Wood and her company Ark Investment, paint a quite optimistic picture. For Tesla's share price in 2027, Ark established a base case scenario of $2,000, an 11-fold increase. Its bearish projection was set at 1,400 shares, and its bullish forecast at $2,500 at $2,000 a share. With a market capitalization of $6.3 trillion, Tesla would be almost equal to the combined value of the top 3 firms in the world, as Apple prior to now, Saudi Aramco, Microsoft, and all of them together would next big thing on the board. Cathie Wood is an avid stock market in the EV manufacturer. According to Wood, Tesla stands to gain the most from the AI revolution and driverless vehicles. Wood's projections for Tesla's stock were not arbitrary. Driving Arks was particularly fond of the company's expectations for its autonomous ride-hailing or robotaxi business, which is expected to generate $200 billion in revenue in a bear market, and $613 billion in a bull market by 2027. Ark believes that Tesla's self-driving Robotaxi will end up being the most valuable asset in the company. These autonomous cars could be the key to unlocking value from emerging businesses such as autonomous ride-hailing, which Ark estimates could represent a $14 trillion opportunity by 2027. They would also eliminate the need for human intervention. The company recently revealed the findings of several simulations it ran to estimate when Tesla's Robotaxi might go on sale. 2024 looks to be the most likely year. This is consistent with the company's earlier forecast. Ark projects that by 2027, Tesla would have a total yearly income of $1.02 trillion, of which 25% will come from the Robotaxi market. Furthermore, it projects that 58% of Tesla's $6.1 trillion in enterprise will come from the Robotaxi industry, which may be a tremendous source of development. Worth at the moment. Ark Investment is getting more and more optimistic that Tesla will soon introduce a Robotaxi service. A variety of launch dates is included in the Monte Carlo model, with the weighted average in allocators being late 2024. The intriguing part is that Ark is long-term oriented, which validates the assertion made by many Tesla enthusiasts that the company would experience rapid growth in the near future. Compared to other pure-play automakers, Tesla has a wider range of product offerings. Should it realize the full potential of autonomous vehicles in the next years, as projected by Ark Investment, the company's stock price may surge. The company's goal was $2,000. A new open-source Tesla model that includes distributions for 41 independent inputs is presented by Ark's research update, which simulates a variety of possible outcomes for the corporation. Tesla's expected, according to the investment firm. The robotaxi industry is a major driver, accounting for 67% of projected enterprise value and 64% of projected E-value in 2027. EVs accounted for 47% of sales in 2027 across its simulation set, a much smaller margin than the Robotaxi, be affected by the emergence of AI. She went on to say that AI is rapidly transforming the world, and that the news surrounding ChatGPT, which has drawn interest from the public and businesses, is happening very quickly. She also mentioned that her firm's portfolios are heavily oriented towards the future. According to Cathie Wood, AI will disrupt a lot of businesses. Tesla is aiming to dominate the self-driving taxi business, which Wood has predicted would be one of the big transportation themes of the next 10 years. So the CEO of Ark Investment believes the company is well-positioned to benefit from the advent of AI. Wood and her company think that Tesla should have a major advantage over rivals in the regulatory approval process, thanks to its data repository, which should help scientifically verify the safety of its vehicles. According to a recent report, Tesla's fleet of customer-owned vehicles travels more than 120 million miles per day and more than 1 million miles per day in FSD. By comparison, Waymo and Cruise have only traveled 1 million miles on public roads, and accident statistics from Ark Invest suggest that Tesla has already outperformed human drivers. According to the firm's analysis, only Tesla's FSD is 5 times safer than manually operated Teslas when accounting for its use on surface streets. Cathie Wood's company Ark Invest has been rather keen on Tesla's growth for a long time, and judging by what Cathie Wood has said, it's more than likely that Tesla is actually the reason behind all of this innovation. In a recent letter from the stock expert, she decided that she had found Ark Invest for 2 reasons: to focus exclusively on disruptive innovation and to create the transparent research ecosystem designed to surface and share information on the convergences between and among the 5 major innovation platforms evolving today, most of which Tesla is actively representing. Wood's bet on Tesla, and it's heavily based on the company's future potential with its Robotaxi. The Tesla Ball believes that autonomous taxi platforms are going to be the biggest opportunity around AI in the next 5 to 10 years. But what do you think? Let us know down below, and let us know what a valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.